Are you ready to understand the factors shaping the USD-JPY currency pair? Trade negotiations and tariffs are major players in this dynamic. But that's not all. Central banks' guidance and economic indicators are key too. This week, Japan's private sector takes the spotlight. On April 23, we expect the services PMI to drop from 50 to 49.7, indicating contraction. Since services contribute about 70% to Japan's GDP, a larger drop may raise recession fears. This could delay a rate hike from the Bank of Japan, making the yen less attractive. Next, let's look at the manufacturing PMI, predicted to fall to 47.8 from 48.8. This will reveal how tariffs affect Japanese goods. Just remember, US President Trump's tariff on Japanese imports changed from 24% to 10% for 90 days. Overseas orders and employment trends will also matter. Japan's trade balance could suffer if overseas demand declines, given its trade to GDP ratio is around 50%. Bank of Japan Governor Kazuo Ueda recently warned about tariffs' potential economic impact, hinting at the possibility of pausing rate hikes. Now, what can we expect this week? Markets will experience volatility due to trade talks, economic indicators, and Bank of Japan policies. In a bullish yen scenario, upbeat PMI data and a hawkish BOJ could drag USD/JPY below 140. But if the yen carry trade unwinds below the September low of 139.576, we could see it accelerate. Conversely, a bearish yen scenario with weaker PMI data and a dovish BOJ could push the pair above last week's high of 144.108 and toward 145. On the US side, several indicators will be closely watched. Key releases include the private sector PMIs, initial jobless claims, and Michigan consumer sentiment. A drop in the S&P Global Services PMI from 54.4 to 52 may signal recession fears, weakening the dollar. A drop below 50 in manufacturing PMI could drive further USD selling. We expect initial jobless claims to rise slightly, and if they exceed 250,000, that might raise recession concerns, influencing Fed policy. The Michigan survey will also be pivotal, with revisions to inflation expectations impacting demand for the dollar. FOMC commentary will guide traders on tariffs and policy outlook. Looking at potential price scenarios, a bullish dollar scenario may arise from easing trade tensions and positive data, pushing USD/JPY toward 145. On the flip side, escalating tensions or weak economic indicators could drag it below 140. In short, USD/JPY movement this week will depend on trade developments, Japan's private sector data, and US economic indicators. Finally, analyzing the daily chart shows USD/JPY still below its 50-day and 200-day EMAs, indicating bearish momentum. A breakthrough above 143 may lead to a push toward 145. However, a drop below 141.608 could expose the low of 139.576. Stay tuned and prepare for an eventful week ahead.